Hope you guys are doing great today.
Hello and welcome to our daily show. Today we're talking about asking the right retirement questions. This is key. Yesterday we talked about asking the right money questions. Today we're talking about asking the right retirement questions, specifically retirement, because we get a lot of people asking us a lot of different financial questions. And so we want to help you to get the right information that you need to make the right decisions for you, yourself, your family, your business. And so we're going to talk about what are some of the wrong retirement questions that we get and what are the right retirement questions to ask if you want to know about retirement and how you can have a successful one. Whatever that means to you. Retirement means something different to a lot of different people. Some people are like, I hate the word. I'm never going to retire. I'll retire when I die. But at some point, you physically will not be able to work. And so you have to have a plan for how are you going to survive? How are you going to pay your bills? Just because you can't work doesn't mean your bills stop. So you got to have a plan. So we're going to talk about it. As you come in, let us know where you're tuning in from. If you like our comment, please like, comment, share, tag anyone you know that may like this information. And feel free to ask any questions in the comments. We'll do our best to get to them while we're live. For those of you on Instagram, we are live on YouTube as well. You can hop on over there if you want. And did I get all of the announcements?
Yes. So look.
Oh, yes, he's ready to move on.
You've got to look at your life cycle. It's a very simple thing. You're born, you do a bunch of stuff, you die. Okay, that's it. That's the life cycle. What you do in between when you're born and then your parents, you become a teenager, your parents you want to be an independent person, independent man, independent woman, but you're still living in your parents' house. All this makes up the whole life cycle. And then at some point you reach a certain age where your body isn't functioning the same way as it was when you were 16 or 20 or 21. And then you may want to do other things. You may have been working for 40 years in the same field, or you've just been working 40 years consistently. Maybe you are working, a lot. And so at some point you may want to either volunteer your time, do something different, whatever it is. Whatever retirement means for you, nobody needs to define it for you. It's whatever it is, but there's some basic things about retirement that you need to be aware of and you need to be thinking about so that it is a successful one. Because I don't think anybody says, I want to get to retirement and fail. Everybody wants to get to retirement and succeed. So how do you do these things? Effectively? That's what we're going to talk about today. And really, I believe that a lot of people ask the incorrect questions. And sometimes they ask questions based on they're thinking you're a mind reader and all these different things. But you have to be able to ask the right questions to get the right outcomes and right results. So Chelsea's going to go over that.
Yeah, can you scoot just a smidge that way? Yeah. He likes to sit right on the edge of the seat, and then I'm getting cut out of everything.
All right.
So I want to talk about really quickly some of the wrong questions or wrong ways to look at retirement because they're just, they're not going to serve you. And so these are some popular questions or things that people say that we hear a lot. So one of them is, I want to retire next year. And we're like, great. How much do you have saved? Nothing. Where do I get started? Okay, so unless you have a very high income or you have way more money coming in than is coming out, it's probably not likely that you're going to retire next year if you have nothing saved for retirement. Now, things could happen, but as a general rule.
You're trying to win a lottery and that becomes your retirement.
Yeah, I mean, you could have a moonshot or whatever, right? But you got to
Even with that, yeah.
So, okay, the other thing is I want to retire with $1 million, but you're living paycheck to paycheck. So now these are not okay, if you're in this situation, you're doomed. No, it's just we want to help you think about things properly of how can you actually make your financial goals happen and identifying where you are and like what you need to do to get where you want to be. So a lot of these are just based on the numbers. If you're living paycheck to paycheck and you want to have $1 million retired, you want to have $1 million at retirement, then you're going to have to, well, where is that going to come from? Right? So we're trying to help you actually put in real steps and actions that are going to help you get there. The other thing that people will say is, I want to double my money. Where do I double my money? I want to make 20%. I want to make, all of these crazy things. And so it's not crazy to want those things, but then you have to look at, if you're not invested anywhere now, well, do you know what different investments will return? So some of these things are not really like the right way to look at retirement or getting real questions. So if you actually want help with retirement and how to reach your retirement goals, we're going to talk about some of the right questions to ask.
Yeah, we're not saying 20% is crazy. That's not, because that's very doable and plausible to do that. We're talking about over what period of time. So when somebody says, I want to double my money, it's like, over what period of time? You keep your money in your bank account, it'll double on 144 years later. So your money will double at some point. It's just, what period of time are you talking about? So those are things people ask us all the time. Hey, I want to double my money. What's the best way to do it? Okay, over what period of time? How much money do you have? Are you an accredited investor? There's all kinds of different things you need to be asking versus generalized questions. So why don't you talk about the first one, the first question that you have on there?
So the first question to look at when it comes to asking the right retirement questions is, how much cash flow do I need? It's not just necessarily like a certain dollar amount that you need at retirement. Okay, now I know I can retire. Because that dollar amount that you may be looking at, that is to generate cash flow, right? To be able to use as income. So you still have expenses, you still have a lifestyle. And so that money is going to provide your lifestyle and pay for your expenses. So if you have cash flow, whether it's a lump sum or whether you have, let's say, like an income producing asset like real estate that's producing cash flow. So how much money do you need to live to cover your expenses and do the things that you want to do in retirement? So how much cash flow do I need?
Yeah, so I always tell people, almost everyone, most people, the majority of people have the wrong retirement target. So there used to be these commercials that would say, what's your retirement number? And it would have like these giant numbers on the screen. And this person's retirement number was $1,133,000. This other person's retirement was $873,000. That was their number. So everybody had this one retirement number. The question you ask yourself is, why was that being promoted? Why was this being promoted as you need to have this random number out there? And it was being promoted because Wall Street wants you to keep your money with them for as long as possible so that you get to this arbitrary number that's out there. When in reality, you're not going to spend the $1,133,000 in 1 year. So why are you planning? Everybody lives their life, for the most part, running their expenses on a monthly, quarterly, or annual basis, right? You pay your cable bill, you pay your mortgage on a monthly basis, you pay your car payments or your lease on a monthly basis. So in America, the system is you run your life on a monthly basis. So why are you setting a goal that's 1 million, 2 million, 3 million? That's fine to have, but isn't your goal supposed to be how much cash flow is it going to generate? Because that's what you need on a monthly basis to live your life. So it's great for you to plan your business. Same thing with the business. You're like, okay, my business will make $10 million this year. Okay, great. How much does that break down to per week? How much does that break down to per month, per day? That's your real focus, is what is the cash flow. So when you're planning and thinking about retirement, asking is like looking and seeing how much cash flow do you need. So first thing you got to look at, okay, and the way you do that is by looking at how much, what does it cost to run your lifestyle? People have different lifestyles. As you guys can see that. People have different lifestyles. So looking at knowing how much it costs to run your lifestyle will then tell you how much you need per month. Then you can project that out to, okay, how can I get to that number? How can I get to the cash flow number? Because what if you can get to your cash flow faster than you can get to the $1 million in retirement? Nobody ever thinks about that. If your cash flow is And so most financial advisors will tell you should take out 4% of your retirement income, of your retirement account per year. So if you got $1 million in your retirement account, it should produce $40,000 a year of income. Okay, great. So now your target is $40,000 a year of income. It's not the million. It's $40,000 a year. What if you could get to the $40,000 a year of income faster than you can get to the million? That's how you have to think about it. That's why your focus should be on cash flow, not the total amount of money you need for retirement.
Well, and when people talk about being financially free, especially whatever you feel about retirement, you want to retire, you don't want to retire, whatever. If you look at financial freedom, that is when you have enough money coming in to cover your expenses passively, like you don't have to actively go to work. So if you don't like the word retirement, think about financial freedom. Like you want to become financially free so that you can work if you choose to, but you have enough income passively coming in to cover your expenses in your lifestyle. So that comes into how much cash flow do I need? The second question when it comes to asking the right retirement questions is, how can I guarantee I don't run out of money? This is a problem that people run into when you look at the lump sum, the dollar amount. I want $1 million, $2 million, whatever. Well, how do you know how long that's going to last you? Martin said most financial people will tell you, take out 4% of your lump sum that you have for retirement. Well, how long is that going to last you? Do you know? Most retirement accounts do not give you a projection of, number one, what you're going to have when you retire, and number two, how long it's going to last you. They just tell you how much percentage to take out. They don't tell you at what age you're going to run out of money. This is one of the biggest concerns that people in retirement have, outliving their money. Okay, we all want to live long, healthy lives, most of us, but we want to have money to be able to live too, right? You don't like just run out of expenses to pay, but you can run out of money. So you got to know, how can I guarantee I won't run out of money?
90-year-old still got to eat. 90-year-old grandma still got to eat. She still need food, still need to eat. My grandmother recently passed away. She passed away 94, 95 years old, 94, I think. And so she ran out of money. She had $0, no income, nothing, zero money. So her grandchildren, my father died. So now her grandchildren, me and my brother and my sister and some of my other siblings have to help support her. So I was the one coordinating everything. I would coordinate the finances, all the stuff that she needed, because that's generally my hat. That's what I do generally for our family. They generally come and ask me for some financial advice and stuff like that. So now I had to coordinate all these things for her. She needed somebody to look after her full time. There's certain things she can't eat because it hurts her stomach. There's all these different things. So 90-year-old still got to eat. You still got expenses. Every single day you live on this planet, it costs you money. It costs you money. You know, in Liberia, where I was born, some people here in America, we talk about people living paycheck to paycheck. That's where if you get paid every 2 weeks, you ain't got to make your expenses. You got to make the money last until the next 2 weeks that you get the money. So it's a person living paycheck to paycheck, right? Then in Liberia, a lot of people live day by day. Day by day means that person has to go and sell in the market to get money to buy food to eat that day. They have their goods and services, and there's no like working 2 weeks and then they get a check. A lot of them live day by day. So with that perspective in mind, you have to look at every single day. That made me just really examine the whole day by day daily thing. Every single day, it costs you money to live because you're not hunting your own food anymore. You're not, gathering the berries and all that. You're buying it. You're purchasing it. So every single day, there's a cost to run your life. So at some point, if you run out of money in retirement, where is the money going to come from to run your life? Because you still got to eat. You may still have a mortgage. You still may have other expenses. You got to pay your electricity bill. You got to pay for all these different things. So making sure you don't run out of money. So one question almost every retiree should be asking is, how do I guarantee I don't run out of money? So there are financial vehicles that you can use. Prior to the 1980s, people would get a pension, which meant you worked for 40 years for a company, and when you left, they paid you what your salary was, but you're not working there anymore. And they paid you that for the rest of your life. And sometimes, if it was set up properly, sometimes your spouse would get it after you died, and it would pay them for the rest of their life. And so that was a way that people could guarantee that when they're 95 years old, they wouldn't run out of money. They will still have money. And in the 1980s, pensions started going away. They got replaced by 401ks or other qualified plans, 401ks, IRAs, 403bs, all of that. And then it wasn't the company's responsibility anymore to make sure that money was there. It became your responsibility. The problem was there was no education. People weren't educated about retirement. So as a result, many people arrived at retirement 20, 30 years later with very little. And then they started running out of money. And then they had to depend on their kids and grandkids to help take care of them. Well, that's not that's not a successful way. So you got to always look at how do you guarantee you don't run out of money. If you want to understand some of these strategies, there's financial vehicles now that you can take your 401k or your IRA and turn it into your own personal pension plan. Well, it will pay you for the rest of your life. You can buy real estate that cash flows. You can buy business that cash flows. There's many different ways you can make sure you have income coming in that you don't run out of money.
So one big money ghost has a landscaping business. So I'm curious, do you have employees? Do you have a retirement plan for your business? Like, do you plan on keeping your business and having other people run the business, or do you plan on eventually selling the business? Because a lot of business owners, you can think about this also when planning your retirement. Like, do you plan to keep your business in retirement and have other people run it and continue to collect cash flow? Or do you plan on selling your business? One of our clients now that has a landscaping business is selling their business. So looking at how can you take what you have now and turn it into financial freedom.
So very, very important aspect. And a lot of business owners don't have their own retirement plans set up. So it's very important that you do that. You can actually, I did a video on this the other day. You can actually take business income, business revenues, and you can actually use it legally, depending on how it's structured, for personal retirement. And so when you do that, you at least, even when you sell the business, you still have your own personal retirement that you built through the business. So if you want to understand how that works, send us a message.
Someone else says doing REI now. Is that real estate investing?
Yeah.
Awesome. Okay, so the third question when it comes to retirement or creating financial freedom, maybe that's a word that people like better. How can I make my retirement as tax-free as possible? Oh my gosh, this is so important because, as you may or may not realize, our taxes are going up, 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 up. They are not going down, 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 down. They're going up. And a lot of people also don't realize that most of the retirement accounts, like if you have a 401k, is most likely taxable. And so when you get to retirement and you start taking money out of that retirement account, guess what? You get taxed like your paycheck, like your regular paycheck. It gets taxed as
ordinary income tax. Yep.
Ordinary, not special income, just regular old ordinary income tax, which means it's higher than if it was like capital gains or something like that from an investment. So it is very important to look at, where can I put my dollars? How can I keep the taxes low? Because as the cost of living rises and as taxes rise, guess what? That means you're going to need more money to live on. So if you're concerned about not having enough money in retirement now, oh, buckle up, Buster. You got to find a way to get that money up and get those taxes down.
Yeah. So let me give you guys an example of how this is so important, because look, the IRS just received $80 billion and they're trying to hire, I think it's 80 billion, something crazy, some crazy number. I know they're trying to hire 80,000 new IRS agents. So
they are.
There's 800 billionaires in America, right? Do you think these 80,000 IRS agents are trying to go after these? They're already going after them all the time. Rich people are already getting audited, all this stuff. They're coming after the small business owner, right? If you got a small business, whatever it is, and you're so busy, you're trying to get your books right, you're trying to do all this stuff, and you're busy building or running your business, that's you they're coming after. Because guess what? They're looking at you as, oh, you creating some revenue, you making a successful business. All right, let's make sure you're not hiding any money hiding any taxes from us. All of that. So they're trying to come after businesses, small businesses, which are the backbone of America, because most people in America work for a small business. So somebody starts a business, they go and get the thing all set up, they start, going down a path of their American dream, to hire employees, and together with their employees, they're building something, they're helping their customers, doing all these different things. And so you realize that your traditional retirement account are things they're wanting to come after. All the money in your traditional retirement account doesn't even all belong to you. If you have $1 million in a 401k and you say, send me the entire $1 million, they will withhold $200,000 in taxes at a minimum. They're not going to send you the $1 million, just like they withhold money from your income. If you're a W-2, they withhold the money from your income.
And if you try to get it before retirement age, they'll penalize you also.
Yeah. And so to show you how much it's not your money, if you're under 59 and a half and you go and try to take your money out, unless you meet certain specific criteria, they not only do they tax you, but they charge you an extra 10% on top of that, just because you're under this arbitrary age of under 59 and a half. How crazy is that? That's not really your money, because the moment you pull it out to use it, they're going to tax you on it. So you have to understand the impact of taxes on your retirement. It's going to be more and more important. You have $30 trillion in national debt. The interest on the debt alone is the fourth largest item in the budget every year. You have a running deficit every year. Where do you think this money's going to come from? Imagine somebody has an overdrawn bank account and they're like making it up with credit cards. Eventually, what do you think is going to happen? And this person has the ability to tax other people. What do you think is going to happen? They're going to tax people higher. So you're not going to fight against that system in that manner and win. What you have to do is know what the rules are, because there's rules that exist that allow you to build tax-free income. Retirement income is tax-free. There's different vehicles you can use. One of them is a Roth IRA. You can put money into a Roth IRA, and you can use it for retirement tax-free. You can also put money inside of life insurance policies and use it, create a tax-free retirement, tax-free social income, because life insurance has certain tax advantages that other vehicles don't have. So it's just different. You just got to know what the different rules of different things are. And here's why that's important. So let's say you need $100,000 a year. If you pull $100,000 out of let's say your IRA or your traditional IRA or your 401k, and let's say your tax bracket is 25%, you would spend $25,000 in taxes. Now let's say you still need $100,000, but you're going to pull $100,000 a year out of something. You pull $50,000 a year from a tax-free income source, and you pull $50,000 a year from your 401k. Now your net, let's say it's still saying 25%, but you're only paying 25% on the $50,000 of taxable income, which is 5, 10, 12,500. So instead of paying $25,000 in taxes, you would pay $12,500 in taxes. You reduce your tax bill by 50%. That's what that means. So by having some of your money tax-free and some of your money taxable, you will reduce your net taxable income. If all of your money is in traditional retirement account and 100% of your income is taxable, you don't have a lot of options in which to reduce your taxable income, which is what a lot of people have in retirement and have no way to reduce the taxable income. So you have to start planning for that now.
Thanks, DJ Greg. He says, I appreciate you two so much. This information is so powerful. Thanks so much. Okay, so the last question to ask yourself, the right questions to ask about retirement is, how can I protect my retirement from losses? So this is just as important as taxes, lowering your taxes, because a lot of retirement accounts are in the stock market, and the stock market goes up, stock market goes down. And depending on if you have a long time from retirement, you might have some more time for the ups and downs and recover, blah, 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 whatever. If you're getting closer to retirement, like a lot of people in, oh gosh, when did I work at E-Trade? Like 99, 2000, 2008. Recently, if you were trying to retire and the market had a big drop, then guess what? You probably didn't retire. And a lot of people, that's why a lot of people are having to work later and later in their years, are having to go back to work because their retirement accounts that were in the market suffered losses. And so they didn't have the amount that they needed to survive on. And so it's important to also look at how, not just where can I protect my retirement money from taxes, but also from losses.
Mm-hmm.
Some of the strategies that Martin mentioned, some of those can be in the market, some of them are not in the market.
And let me give you some perspective to think about. So let's say you got $1 million and you're going to go retire, and you're going to take out 4% a year. That's $40,000 a year. But let's say you have a 20% drop in the market. So instead of $1 million now, you still have 800,000. If you still follow the same 4% rule, meaning you're taking out 4% per year, your income went from $40,000 a year to $32,000 a year. That's an $8,000 a year difference. So if you break that out monthly, that's now impacted something in your life because you were planning for a lifestyle. Now you can say 2 million. If it's 2 million and you're taking out 4% per year, that's $80,000 a year, right? Which is a crazy way to plan for retirement because very few people get to retirement with $2 million. So to tell people they need 1 million, 2 million, 3 million, whatever it is, it can seem an impossible goal when they're in reality, the person needs $4,000, $6,000, $8,000 a month. That's in reality to run their lives on a monthly basis. So if you had a 2 million and then you had a 20% drop, you lost 400,000. So now you have 1.6 million. So then if you use the 1.4, the 4% distribution rate, you're looking at $64,000 a year of income versus $80,000 a year of income. Big drop. You're talking about massive drops for somebody who worked so super hard to get to 2 million, only to have it drop. That's just a 20% drop. In 2008, you had a nearly 50% drop. You have people losing 30-40% of their money in 1 year. So understand that some of those people are planning to retire in that year and then they couldn't. And so then you also have the impact of inflation. People weren't planning for inflation. So now you go to the grocery store, something costs 10% more, 20% more, 30% more. So now what does that mean? That means you may have to take out more money from your retirement account. So you got to make sure that you protect from losses, especially when it comes to retirement. Now, if there's other assets, maybe you buy crypto and it fluctuates and everything. We have some crypto assets, but then maybe you like day trading. Okay, you may suffer some losses, you may suffer some wins. Great, but when it comes to retirement, your retirement money should be predictable. It should be as predictable as possible because it's cash flow you're going to be running your life on. So you want to make sure it's predictable, and the way to make your accounts more predictable is to utilize strategies that don't suffer losses. Lots of things we do. You can protect your retirement account from losses. There's ways to get guarantees in your retirement account. We're planning somebody's retirement plan, and then they have a certain amount of money. They need to make their money last the rest of their life, and we show them a scenario in which they would get income for the rest of their life that's based on what their lifestyle is, that they would not run out of money no matter how long they live. And it has certain guarantees in there that the money will be growing for the next few years with a worst case scenario. So we can predict for this client exactly how much money he'll have when he retires on day one. It will last for the rest of his life. And if he passed away prematurely, money will continue to pay his spouse for the rest of her life. See, now they've secured their retirement. That's how you do it. It has to be predictable. Cash flow in retirement has to be predictable, and then you can do other things on top of that.
So if you have specific questions about your retirement, feel free to reach out. And if you have a retirement account with at least $50,000 that you would like help reviewing to see how are you protected from taxes, how are you protected from market loss, how much cash flow do you need? Will this money that you have provide the cash flow that you need? And what are some strategies that can help put you in the right position for retirement when you want and need to retire? You can go to sixbuildingblocks.com/retire.
Yeah, we're not going to put it on there.
Oh yeah, retirement. I forgot what it was. We have so many links. sixbuildingblocks.com/retirement. If you'd like a free review of your current retirement account, could be a 401k, could be an IRA, Could be a Roth IRA, could be a 403b, TSP, could be with a previous employer. But if it has at least $50,000 in it, then we're happy to do a free review for you. And if you have any specific retirement questions that you want to ask us, you can feel free to reach out and message us.
Yeah. And if you don't have a retirement account, but you would like to have a retirement plan and you don't have something set up, maybe you're a business owner and you're looking at different strategies, you wanting to be tax-free, you want to make sure you're protected from losses, different things like that, send us a DM and say, hey, I would like to look at options for retirement. And then we will go through and help you get a plan in place that would be suitable for you, based on where you are today, based on your finances and different things like that. So you can always feel free to message us and send us messages and get in communication with us and ask questions, and we'll be able to help to point you in the right direction on things that will be helpful.
So thanks for.
I was going to say, but for those of you who already have an existing retirement account somewhere, and you can go here, 6billionlaws.com/retirement to get a